What's up, YouTube? It's the Action Figure Grader coming back to you with another video, and this is fresh off the press. It just happened. I just received the announcement email from CGC. CGC is the world's leading authority for graded comic books, magazines, and trading cards. They just announced that they are now owned by Wall Street. That is right. Blackstone Group, which is a publicly traded kind of investment firm that has investments across all kinds of different industries. They just announced that they are buying CGC. So this literally just happened. And I recorded it once, but I want to do a second one because I have some additional thoughts that I thought were important. I'm going to cover this largely from the graded action figure viewpoint and what that means for the industry for graded action figures. So be sure to check out Comic Book Investments on YouTube. I'll put a link to his channel profile in the description for this video. But David over there, he's been on my channel. I've been on his channel. We're doing a live stream next week. I'm sure he's going to have much more detailed analysis of this announcement from the comic book side of things. He's the expert on the comics. He's been doing it for years. He's a comic book dealer, a reseller. He sends in 300 plus books a month to CGC. So I know he's going to have some pretty significant thoughts on this topic, but I wanted to talk about it as well, just because I cover the graded collectibles industry. But here's the press release. It literally just came out. Blackstone announces that they are acquiring Certified Collectibles Group, which owns CGC. It's a subsidiary of CGC. They valued the company at $500 million. So Blackstone is paying $500 million from a gross valuation perspective to acquire a majority stake. Now, I want to cover a couple of important points. First, Mark Salzberg's CGC's founder and Steven Eichenbaum, the CEO, will retain a significant minority stake. So they're incentivized to continue to grow the company. Now, the question is, will there be a hangover after the acquisition? You see it all the time across all kinds of different industries. When a company gets acquired, you get a lot more employee turnover. You get a lot more laissez-faire with the quality of service or the quality of the products. I used to see it all the time when I used to be an investment banker. I did a lot of acquisition work back in the old days. Now, again, I was a peon, but I saw it. You know, when a company got acquired, number one, it tells me two things. Number one, that the owners of CGC view this as the peak. This is the peak of the graded collectibles industry, and they want to cash out. They want to get their money out of this business at what they view as the peak. And that's what they're saying right now by it being acquired. If they viewed that this was not the peak for the graded collectibles industry, they wouldn't be selling right now. The reason they're selling right now is because they view prices are so crazy across all collectibles. Submission rates are through the roof for all kinds of different collectibles, as I've covered in multiple videos. They view this as the peak of the market, of the industry. So they're selling out for a $500 million valuation. Now, that $500 million valuation is for the whole company. So that's not the total cash they're getting. The $500 million valuation is what the whole company is being valued at. And as I've already mentioned, they're maintaining a minority stake in the company. So Blackstone and some of the other investors that I'm going to cover in a second, they're only buying a majority stake. So it's got to be at least 51% to have voting control for the decision-making at CGC. Who knows what that number is, whether it's 51% or 60% or 75%, who knows? But that's the overall valuation is $500 million, which is a massive number for just graded printed materials, comics, posters, trading cards, magazines. So they view it as the peak, but the other thing it tells me is that there's potential for CGC to dip in terms of quality, in terms of turnaround times, in terms of employee quality, employee expertise, because a lot of people don't want to work for Wall Street. You know, they don't want to get underneath the umbrella of Blackstone. And so they might lose a lot of key employees. We'll see. David had mentioned in previous videos that when CBCS was acquired, CBCS is another comic book grading company. When they were acquired by Beckett's, their quality suffered massively. So it's going to be interesting to see if that happens with CGC. But the other thing I want to point out is that Blackstone, this could be the first step in Blackstone's acquisition strategy within the graded collectibles industry. And as I highlighted here, they have nearly 650 billion, that's billion with a B, in assets. So while a $500 million valuation seems like a big number, on a percentage basis relative to everything that they have under their umbrella right now, it's not that big of a number. And I could easily see Blackstone taking a 3 to 5 or 10-year approach and saying, okay, well, this is our first step into the graded collectibles industry. Now do we go after action figures? Now do we go after some other kind of form of collectible, sports memorabilia? And so whether if you look at AFA, CAS, and UKG, the three big companies in the world for graded action figures, I believe all three of those are privately owned across different owners. And, I bet that they probably, at this valuation, probably raised a lot of eyebrows with them. And, will Blackstone move into other spaces like the action figure industry? Who knows? So, but I got to believe that this is a pretty big, a very interesting data point if I'm an owner of one of the big three grading companies. And the other thing I wanted to point out is that there are a number of other minority investors as part of this transaction. You got Rock Nation. I mean, I believe that they're kind of in the athlete representation space in terms of agency. Michael Rubin, the founder and co-founder, the founder and executive chairman of Fanatics. I mean, that's a sports-related business. You have Andre Iguodala, the NBA player. He's part of this transaction. Daryl Morey, the president of basketball operations for the Philadelphia 76ers in the NBA. He used to be with the Houston Rockets. And then a couple of other Main Street Advisors, who is an investment advisory firm related to athletes, recording artists, and other leaders in the entertainment and business sector. So it's really, I think it's important to note these minority investors that are part of this transaction. And so Blackstone is viewing CGC as potentially expanding their service offering to get more into sports-related memorabilia, into the entertainment and music and movies and things like that. And while they do have a little bit of that already, such as their posters and things like that, I mean, they don't really cover to a significant level other kind of forms of memorabilia like sports collectibles, signed footballs, whatever, jerseys. And I really think that they're viewing these other minority investors as access points to get into those industries with CGC or potentially with someone like CAS or AFA or UKG. Because CAS and AFA and UKG, they really have better, they have the expertise in terms of encasement and in expertise in terms of what the item is that CGC doesn't have right now. So I could potentially see Blackstone pursuing one of the big three grading companies for action figures to create some economies of scale, to create more expertise where CGC is lacking right now. I mean, clearly they're the leader in comics and other printed materials, but if they're going to be pursuing the sports memorabilia angle, which it appears they are based on these minority investors like Andre Iguodala and Rock Nation and things like that, then they're going to need somebody with encasement expertise for those types of items. And that's where CAS, AFA, and UKG have that expertise already. So I got to believe that Blackstone is probably going to be pursuing more acquisitions to kind of fit in with this. But they viewed this as kind of the first step. And they're setting up all the pieces, all the investors, all the advisory board to potentially expand even more into the graded collectibles space. So while CGC clearly views this as the peak, Blackstone sees this as a stepping stone to even a larger market. So we'll see what happens. But again, I encourage you to go over to Comic Book Investments. I'm sure he's going to have much more detail as it relates to the comic book industry. It's a great channel if you haven't checked it out yet. And I'm going to be on his channel probably next week. So if you enjoy this kind of content and you're new to the channel, welcome. If you are an existing subscriber, I want to say thank you again for watching. I'll be back soon, and I hope you found this information useful. Talk to you later.